The NASDAQ down about 2.5%. Big names like Amazon and Google absolutely plummet. Are we screwed, guys? Are we screwed? There is fear and blood in these streets. Some people who have been talking bearish for years are going to say, I was right. I called it. I called it. Now, also, Yieldmax pumpers got hit especially hard today. Stocks like, or ETFs like TSLY and MSTY, the MicroStrategy one, got absolutely donked in the donk. It was not good. So, I refuse to fearmonger. It's just not my style. I don't believe that the market being down 2 or 3% on a bad jobs report means that we're all doomed and we're all screwed and we all bought the top and we're gonna just lose all of our money. It's all gonna go to zero. Today could have been an interesting buying opportunity. I prefer on very, very volatile days to sit back, collect my thoughts, think and consider, what do I want to do in the coming days? People making rushed decisions, hasty decisions, end up making wasteful decisions in a lot of cases. Haste makes waste. That's a saying for a good reason. So, with that, yeah, the J, long-term baby. That's right. Yeah. Well, it's how much and of what. I think today, certainly, well, it's funny enough, on this red day, Medical Properties Trust up. Interesting, right? But let's go to Amazon real quick. Now, if you believe long-term in Amazon, today would be an opportunity, right? I think when you look at, analysts, of course, they're always going to be like, strong buy, it's a Magnificent Seven stock. But let's take a look a little bit under the hood here. So, price to operating cash flow of 17.3. For comparison's sake, in 2021, they were selling for 36.5 times operating cash flow. That valuation is half of what it was in 2021, and the share price is actually cheaper than it was at a lot of points in 2021. Do we think Amazon will continue to become a better and better business, more and more profitable into the future? If so, probably it's a good opportunity today. And it's also, of course, cheaper in terms of earnings and free cash flow as well. But when you want to look at what the actual underlying business produces, I think operating cash flow is a good thing to look at, because then you're not necessarily artificially discounting them for their capital expenditures. Yes, the capital expenditures are a real cost, but it seems like they've historically done a good job of realizing returns on those capital expenditure investments. So I wouldn't want to necessarily discount Amazon hugely because of their CapEx if we can expect that that money will be well spent and that they'll get a return. And I've been told that a lot of the current CapEx is actually on their cloud business, which is both fast growing and high margin. Oh, yeah. I don't love talking about Intel, but that's because of the fact I'm still personally feeling the pain on it. But Yeah. Interestingly enough, people say it's garbage and bad and everything, but here we go. 7 times operating cash flow. So not expensive compared to the historical norms. Price to book of 0.72. So right now, the market is pricing Intel for just basically, I guess, like a Chapter 11 is what it seems like. Is Intel going to go into Chapter 11? I don't know. But I really doubt it, because at some point, the construction projects that are leading to the free cash flow being negative are going to end. And then you're going to be left with a company that trades at a pretty low multiple. And granted, the debt and the interest on that debt could be a big nut for them to crack, but I don't know. I have my doubts that Intel will actually crumble to the ground. They might actually spin off an IPO, the foundry part of the business, which could potentially unlock value for shareholders if people start to actually believe that that has value separately as its own business. But if they bought that, would the stock be this cheap? That's the question. It's difficult. It's very difficult with Intel. Now, other stocks that led the way on the crash today. The Googly Moogly, down 4%. 4%. What gives, Google? Now, I could see a bad jobs report leading people to think maybe ad rates will be lower because the consumer's weak. People aren't going to spend as much to advertise to a weak consumer. It tracks, I guess, logically. But, I mean, this is, from a PE perspective, can you imagine a few years ago? Just absolutely crazy. If you could say that they're still growing at this rate and would be this cheap, really. But I digress. People think, oh no, bad jobs report, sell, 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 sell. And for my international Southeast Asia friends at Grab, I love me some Grab, of course. I think it probably more fell in sympathy to to the rest of the market, more so than for anything specific to them. I mean, only down 1.5% compared to where like an Amazon or a Google fell 3-4%. When do I think it's a massive buy-in? Will we be getting an Intel cult? You know, if Intel ever was a massive buy, it's probably while it's trading under their book value. But it's tough for me to sit here and say, oh, time to pull the trigger, because I mean, my cost basis is in the low 30s, and I already have like a pretty good sized allocation into it. And it's like, how much do I want to bet on Intel specifically? And as far as breaking up, I'm assuming you're talking about Google for being broken up. I think it's because they own search online. And it's not necessarily that other competitors don't exist. It's just that nobody uses them. When's the last time somebody said, oh, let me Bing that real quick? Said nobody ever. Let me DuckDuckGo that real quick for you. In fact, if we want to find out why they want to break up Google, we would say, let's Google that. Find that information. So Google needs to buy out Yahoo Finance. So I believe Verizon actually owns Yahoo right now. And I don't know if Verizon wants to sell Yahoo, but yeah. It's a dinosaur that owns a dinosaur, I guess you could say. And Google has their own finance like extension, so I'm not sure why they'd want Yahoo. Speaking of finance extensions, I do want to just mention real quick, shameless plug, that this stream is currently sponsored by one Moomoo. That's right. The cow one. They will give you 15 free stocks if you sign up with my link in the description below. Tell your friends. Yeah, I know, right? Yeah, brain dead. Moomoo. 6.8% margin rates, by the way, lower than Robinhood Gold and M1 Plus. And it honestly, it looks a lot like TradingView or whatever when you are on their desktop app. I don't really use a lot of the indicators and such. Technical analysis is not a strong suit of mine. Right. Yeah. I mean, that's the funny thing. Khmer is paying like 12 or 13% to Schwab right now. And he could be paying 6.8% to Moomoo. So, but yeah, he's got his Schwab account and his Robinhood account. And I don't know which one he bought the MSTY in. But I mean, let's see how our friend Mr. Khmer is doing in his MSTY. I heard he just bought another 100K of this like a couple weeks ago. All right. Well, he's certainly burning through that really fast. Yeah. So, yeah. And the funny thing about him doing that on Robinhood, he's claiming up and down that he's making $10,000 a month in his Schwab account. He's not. It's like $8,600. He's not making $8,600. He's getting $8,600 in distributions from his Yieldmax funds, but that is not profit. That is mostly return of capital, and he's taking massive losses and keeps getting margin called because he's got a massive amount of leverage. So he's got his TSLY also. Oh, okay. Yeah, that's probably not doing too well either right now. So the problem is that just because something generates revenue or income, it doesn't mean that you can't lose money, and it doesn't mean even that the income is offsetting your losses in any real way. Like, imagine if he owned an apartment building where he had a 13-14% interest loan on it, and maybe it's paying him $10,000 a month in gross rents, but every single month he has, $10,500 worth of repairs, CapEx expenses, maintenance, common area utilities, etc. Well, does the $10,000 in gross rents mean that you're making money on it? And let's say that the condition of the apartment building is deteriorating, so the value is going down. And then as people move out and you have vacancies, you have to lower the rents every few months in order just to fill them, which this is an analogy for what's happening in Yieldmax, because as the net asset value erodes, so does the income generated when they sell options. Because what they do is they have synthetics, they sell options against options, but any dip in the underlying stock price erodes the net asset value, as honestly does the calls they sell limit any appreciation they could have, capping it. So it's basically just like a downward slope where the share price kind of erodes at a kind of similar rate to the pretend income that they actually pay out. And view count went from 11 to 8 as I explained that. I guess people don't want to hear how Yieldmax works. I'll just say those 3 people that dropped off, they were Yieldmax buyers probably. PayPal is another one that dipped hard today for like no good reason, by the way. JEPQ, huh? I have not. I haven't really looked into JEPQ. I looked at JEPI once a while ago. It's just not my style. You know, if I want to make money off of options, I'll just write my own. At least then I understand what's going on and control the strategy. And if it doesn't go well, then at least it was a decision that I personally made and isn't some boneheaded strategy. And by the way, they're paying an almost 1% expense ratio on those funds. So imagine having your investment erode over time and paying 1% for the privilege, while also having 12 or 13% margin interest in Schwab and being leveraged. Oh, yes, that's true. Now, BTI is my idea of a high-yielding investment. Now, it's not going to tell you it has 80% yield, but the 8.71% shareholder yield is going to be dividends and buybacks, real value creation, or maybe not creation, but it's a return of actual value to shareholders. That might be a better way of saying it. The value creation happens when they actually sell their products and everything at a profit, but they return that value directly to you, partly through dividends and through their buyback program. And at an undemanding valuation of 6.4 times free cash flow, I don't think you can really go wrong when it comes to BTI at the moment. Their closest peer, which is Altria, which, by the way, Altria only sells cigarettes in the US where smoking is declining rapidly. And they're hitting a point where they're having trouble, in my estimation, offsetting those losses with their non-combustible nicotine products like vapes and things like that. They're trading at like 10.5 times free cash flow. So BTI is still a lower multiple, even though it's not a US-only enterprise. And I think I would prefer, even if they were at the same valuation, I would rather have the international than the US only. So I'm pretty happy with BTI as an investment. And yeah, they've just been steadily going up. They're not volatile, right? They're very low volatility. Their beta is 0.27. So they're going to move on the average day, a lot less than even the overall market. But the difference here is during these times where the market on the whole is getting crushed, they're slowly and steadily moving upward because, rightly so, people are viewing it as a safer place to park money right now. If rates get cut, that 7.7% dividend yield suddenly looks really good as a somewhat secure return. I hesitate to say that it's safe, but the cash flows are extremely consistent in tobacco, I think for obvious reasons, or I should say in nicotine, because most of these companies have transitioned to a portfolio of nicotine products rather than simply cigarettes. But I think the consistency of the cash flow and the consistency of the dividend payouts and the fact that the stock isn't very volatile makes people view it as a pretty reasonably safe place to park cash. And here, like in 2019, $8.3 billion in free cash flow, trailing 12 months, $10 billion. So there may be like a little bit of free cash flow growth over time in this, but I wouldn't say it's going to be anything bananas, probably pretty close to like inflation, maybe slightly beating inflation. But that's really all you need if the multiple is low and they return most of that value to shareholders, which they do through dividends and buybacks, and sometimes debt pay down. They were focused on deleveraging not too long ago. Pokeblend, thank you very much. Yeah, Paul, that is a good point. Philip Morris International, or PM, does get a higher multiple because I think people are enthused about their Zins oral tobacco, or rather, no, sorry, there's no tobacco in Zins. It's oral nicotine. So basically, people get that like that nicotine buzz from the Zins without the the cancer that comes with tobacco. Allegedly, I mean, I can't say for certain that nicotine doesn't on its own lead to any kind of cancer, but I don't think there's any studies that support that it does. So it's generally viewed as safer than actual tobacco leaf, which we know contributes to cancer. So, Blake. What do you think? High Tide was another one. Now it's not down as much as like some of the big tech companies were today. Do you think that it just moved down kind of in sympathy with the market, or because the other day it was actually up quite a lot. So here, I'm going to pump High Tide a little bit right now. Okay, analyst strong, buy, whatever. But look, when it comes to Canadian cannabis, who else is at 7.5 times free cash flow, 6 times operating cash flow, growing market share, expanding into Germany? Who else? I'm not sure about when they're going to be net income positive. I'm guessing probably in the next year or so. Blake probably, well, I know Blake, he knows this company like the back of his hand. I think I'm at around 4,000 shares, something like that. High Tide. Yeah. So honestly, the rescheduling delay, it's a little bit annoying to me that that a company that doesn't even need US, like they don't need the US market to open up to be a good investment. Yet the market reacts the way it reacts. And also, the fact is, part of the reason that I switched out Altria for British American Tobacco, not only because of trends in U.S. Nicotine use and cigarette use, but also because if I'm also getting high tide, I don't really need Altria Group's Kronos investment exposure. I don't need to be doubled down. I'm happy with high tide as my my one bet in this space. Their CEO, as Blake will point out, has a good track record of hitting his operational targets. Their discount program continues to grow membership impressively. Imagine that. Actually, if they have to start paying income taxes, that would be interesting. Almost view that as a bullish thing. Like I hate to see money going to the government instead of to shareholders, but if you're getting to the point where you're making enough money that it's taxable, that means you're doing something right. At least you're turning a profit. Marijuana pouches, not that I'm aware of. I don't personally indulge myself, so I don't know much about the methods of ingestion beyond the fact that there's multiple options. There's vape. There's just rolling a J. There's edibles of various varieties. So Cabo, the problem is that they're a publicly traded company, and federally, it's still illegal. And since there's federal regulations for U.S. listed publicly traded company, it invites a lot of problems. I'll just say that. It's stupid and asinine and backwards that we live in a time where Anheuser-Busch can be publicly traded and sell their faculty reducing poison in a can to millions upon millions of people, and it's not an issue. Yet something like high tide has to wait for some laws to change, basically. And it's irritating because, especially with the thing where right now the rescheduling thing isn't even it's not even really the full thing that would open this up. It's a little bit of a nudge around the edges. Right now, this is categorized the same as like meth and like heroin and crack. Yet, I don't think you could actually find a single credible person to say that the harm it causes, if any, is anywhere near the same. So it's like it's in there because of the old antiquated DARE program, gateway drug hypothesis, which is complete and utter nonsense. And it's widely known to be nonsense. It doesn't even take an expert to know that it's nonsense. It's absurd on its face. And that's my rant on that. Oh yeah, the prison industrial complex probably plays somewhat into why the laws have been so harsh for so long in some areas, for sure. But I will say I am happy that our favorite medical REIT held today. Now, I don't know how other REITs did. Okay, so, all right. I guess I'm going to guess that REITs probably were like even or slightly up today overall. Oh, yeah. Not too much happening there. How about, yeah. So, okay. So MPW being up close to 1% moved a little bit more upward than some of these other REITs I just looked at. The fact that they closed up, I think now, 3 days in a row? That's probably pretty good. I know. Vici down while MPW up. It's almost like, what's going on here? I thought Vici was the best stock in the whole market. Doubling down every time I got bad news. You're probably doing pretty well if you did that. I didn't go hard enough when it was at $3 a share, so I'm technically still a little red at the moment, but it's, I think, going to be fine. Aldag's bonuses now are tied to share price, so there is a lot of motivation to make some stuff happen on their end. The philosophy of invest what I know. It's exclusive to Canada, and I'm not a customer, and still. So, I mean, I'm not a customer of British American Tobacco either. I don't buy cigarettes. I don't buy vapes. But I understand what the company does. I understand their business model. I understand free cash flow. I understand who their customer is and why it appeals to them. Does knowing it mean that I have to personally partake in what they do? I don't think so. I mean, I know plenty about Coca-Cola's taste and flavor and mouthfeel and everything else, but I'm not invested because that's not enough to make it a good investment. Being a customer of something, I think, isn't the same as knowing it in the sense of knowing if it's a good investment or not. Granted, there are some cases where it helps. Like, I would say with Amazon, for example, being a customer can help you understand how what they do is so remarkable. And something like Google or Meta, almost everybody is at least on the platforms and understands the power that they have to keep your eyeballs on the platform. So that could be something. But yeah, do I need to personally ingest the product produced by the company or sold by the company in order to understand it and invest in it? No, I don't think so. I mean, I don't go to the hospital that much either, but here I am in a hospital REIT, so there you go. I understand the point that you're making, but High Tide's business model is like it's a discount model, somewhat similar to like a Costco or a Sam's Club, which I do go to at least one of those, and it's growing its memberships there. You would generally view that as a good sign. They generate good free cash flow. I understand the marijuana customer as well. I know people who are users, both medically and recreationally. So I know that part of the business. Secondhand, sure, but I know it. Yeah. Helps to know if they're selling good-ish. So here's the thing about the good stuff. I also know that thanks to a lot of advancements, and we'll call it horticulture, over the last few decades, the stuff that is sold generally now contains so much more of the good chemicals, the THC and whatnot, compared to what was available in the 60s, 70s, 80s, 90s, that it's almost all by that measure good stuff. Oh yeah. And to Blake's point, they are just the store. They're not a producer. So they probably sell both like kind of the low end and the high end brands probably. Cannabinoids. Yeah. Yes. So they have something for every customer basically. Just like any other retail store. They have your discount stuff and your dank kush or whatever the hell you guys call it. But are we screwed? Are investors screwed? I don't think so. I do tend to find these times where everybody's freaking out over one bad economic indicator very amusing. If there's a recession, there will be maybe some pain in the market for a few quarters, and then everything will sort of find its equilibrium and we'll be fine. As long as we make prudent choices and we're not all in on Yieldmax. That's the key. Don't be the absolute dumbest of dumb money and you should be okay. Yeah, I more or less agree with that, Pokeblend. It could be a bit of a slow burn to kind of make a little bit of a cheap pun there. Could be a bit of a slow burn, but when it does pay off, the payoff should be handsome. It could be very slow and then all at once. So, Paul, High Tide is not like Walgreens. Walgreens, I think their best days are very far behind them now at this point. Walgreens is something I did in my dividend aristocrat era, where I thought that meant something. And I haven't had it now for a while. I got rid of it. I took both my loss and my lesson. So, Cabo, I actually have considered that as a possibility because Amazon is getting into pharma, and they did buy Whole Foods when they wanted to get a foothold in the grocery space. So if Walgreens is cheap enough, yeah, and think about, because of all the locations Walgreens has, the footprint for like fulfillment from Amazon Pharmacy. The geographic footprint, they'd be able to do fulfillment very rapidly. Of course, they would have to get out of the whole retail side of things, like the brick and mortar retail. Like they wouldn't, I think they'd have to do away with it being a store that you could actually walk into to buy stuff. And they would just have to be basically like mini pharmacy fulfillment centers. And they'd probably shutter like half the locations. There'd be maybe a little bit too much geographic overlap. But that would be interesting. Main Street or O. So when you say Main Street, do you mean ticker Main? If I was to pick either Main or O, I would probably pick Main. But I do already have some O, like not much, maybe like $1,000, $1,200 worth, something like that. Not a huge amount. And that's in my YouTube portfolio, by the way. So speaking of my YouTube portfolio, every time from now until infinity, when I get an additional 1,000 subscribers, I will allow people in my audience to nominate and vote on stocks that I have to buy with my own money. And not surprisingly, you guys picked MPW last time. But when I hit 1,000 subscribers, you guys picked Realty Income or O. And that's why I have the stock. It wasn't my choice. My viewers chose it for me. Yeah. Well, at least the income you get from Realty Income, Stag Industrial, Maine, etc., at least those are actual cash flows produced by companies. In the case of something like O or Stag, it's rental income. But at least that's actual real income, and it's not return of capital like Yieldmax, right? You think cash will be the best position, huh? I mean, maybe. Early 2025, I'll have like another. We'll just say that there's going to be some more cash to manage. It's going to be pretty good. So I'm not in a hurry to panic sell just to have cash on hand. That problem is about to be solved. There will be an opportunity to deploy a lot of cash. So Pokeblend, I have to hit 3,000 subscribers first before you can vote. I always do videos on the process where people nominate in the comments after I hit a certain subscriber threshold. Then we use the community page on YouTube as a polling station. And I'm doing the same thing now. I'm going to do it on X because I'm starting to get kind of close to my 500 follower goal on X. And I'm going to do a separate X portfolio where people who follow me there can also pick stocks. And maybe we'll have like a competition to see if my X followers pick better stocks than my YouTube subscribers. It'll be fun. But on YouTube, I have to hit 3,000 before the next pick. So I'm a pretty good distance away from that, unfortunately. Now on X, I'm at like 350 or something followers, and when I hit 500, I'm gonna let them do a similar thing. And on there, I think I'll do every 500 additional followers, and I'll keep it to the 1,000 on YouTube. But I mean, yeah, if you keep liking the videos and watching them and all that, you are in a way helping us get to that next level. So just keep on tuning in and hang out, and you're doing your part basically. And I definitely, if you're not in the Discord yet, I definitely recommend going there. Recently been by Jack. I'm not sure what stock you're talking about. Are you talking about like Jack in the Box? See, I thought Jack in the Box recently had a merger of some kind with another food company. I don't really follow Jack in the Box very closely, so I would have a hard time. I would have a hard time speaking in an informed way on this. They bought Del Taco. Okay. So for my cheat meals, I used to order, and this was a few years ago, I used to order like $30 worth of Del Taco and smash the entire meal in one sitting. Those were my cheat meals. And by the way, for anyone who doesn't know, at that point in time, I don't know what their prices are like now, but $30 could buy a lot of Del Taco. So, Jack in the Box. Okay. All right. I'm going to guess that free cash flow this is like a weird temporary thing for some reason. Historically, they maybe were a little. No, we're pretty close to historical norms for valuation, I think. For Jack in the Box, analysts like it. You know how much I love analysts. Okay, this revenue growth is not inspiring. I'm actually maybe on a long enough timeline. It's good. The last few quarters, it's like, The king of the drunk taco. Yeah. I've who has not done a late night shameful drive-through at Jack in the Box? Not while drunk, of course, because you shouldn't be doing the drive-through while you're actually drunk. Your designated driver maybe can take you through, but got to be responsible, guys. Yeah, I'm not a huge food brand investor, that's for sure. The really, really high quality ones tend to be pretty overpriced. From AI to EV, so what is this? We talking Tesla? Oh gosh, down 8% today. That's that's rough. That's rough. From AI to EV. I mean, why? Yeah, I mean, I've literally never heard of this, so. Okay. Is this a UK EV company? Yeah, I've literally never heard of this, so I'm a little out of the EV loop, more or less. Because I recognize there's a lot of companies popping up in that space over the last few years. Obviously, a lot of them are probably riding the Tesla coattails. And I think it could be challenging at this early stage to separate the winners from the losers. Yeah, that's true. That's a good point, Poke Blend. The Discord link in the description is a great thing to join. Yeah. So I'm and talk about what Paul was saying earlier, right? Understanding the business. Electronic vehicles, I don't know that I maybe understand enough to be able to separate the winners from the losers, and even the winners, which I think we can pretty safely say Tesla will be one of the winners. What is an appropriate valuation? Because I still think that people's expectations of Tesla are somewhat inflated, to be honest. It's going to be $37 trillion by 2030, depending on who you listen to. It's absolute madness on the one end. And hey, maybe people that are negative on it are too negative, but I have trouble finding anyone with a bull case of Tesla that sounds reasonable. Hell, even sane, let alone reasonable. And why would you buy EVs, and why would you buy a British car company? That's kind of what I'm getting at, I think, Cabo. Like, why would I? Unless there was some type of a bull case for one of these companies that seemed realistic and reasonable and at an attractive valuation for the opportunity. Yeah. You say it's undervalued, and maybe it is. I don't know. I am not sure how to come up with a reasonable valuation for something. I mean, is it enterprise value to sales? Is that, or is it just price to sales? Is it because their price to sales is below 1? And is price to sales an appropriate way to value something like a car company? A car company that's got negative cash flow. Maybe Neo, Tesla, and Rivian will be the winner. Maybe. I'm pretty confident that overall in the EV space, Tesla is going to remain a leader. I think they've at least, got proof of concept enough to justify that assumption. But if we look back, oh crikey. Why does the internet have to be slow? There we go. If we look back, okay. Right now, valuation-wise, for basically every metric that measures income, bottom line, Tesla is now, right now, more expensive than Amazon and Google, and probably even, maybe even Nvidia. They're more expensive than by those metrics. Do we think that a car company is going to be stronger than those companies in the long run? Even the best car company? Even if it's the best car company with the best growth and the best product? I don't know. I'm skeptical. And are you saying that the other EV companies are cheap because their price to sales is lower than Tesla's? BYD, huh? You would argue Tesla's a tech company. What percentage of their revenue comes from things that aren't cars? To give you to give you the impression that they should be given tech company valuations. It is a great question. And I'm not going to say that you're wrong, that maybe they can't grow some of their other segments. Like Amazon did it with cloud. They were an e-commerce retailer only for a pretty long time. And they've grown cloud, Prime Video, ad revenue, etc. So Amazon has proven that you can be one thing and then become more than that. But right now, Amazon, who has proven that they're more than just an e-commerce retailer, is trading at less than a third of the multiple of operating cash flow as Tesla, a car company. So do I sit here with my money and think, oh, well, clearly I'll put that money into Tesla because they could be what Amazon already is and is cheap? I could see Tesla having a somewhat of a premium over something like Ford. Toyota, in my opinion, of the legacy car brands, Toyota Motor Company or Motor Corporation is probably the best run of the legacy automakers, the internal combustion engine boys. So I could see, and even they sell at like a 1 price to sales ish. 11 times operating cash flow for Toyota. The problem with something like a Ford or a GM, the auto workers unions have made them uninvestable, in my view. 3 times operating cash flow for Ford, and I still won't touch it. I mean, if they were able to do like a substantial buyback program, that would be something. But no buybacks at 3 times operating cash flow. Yeah, I just Ford. Talk about a cigar butt. People say I'm a cigar butt investor, but I don't buy Ford, so. Yeah, Toyota definitely runs things pretty well. I think they sell more new cars per year than any of the other car companies that exist right now. And what are they known for? They're known for reliability. Millionaires apparently own more Toyota Corollas than any other car. Or that could just be because it's one of the most common cars that exists, and so across many different populations, it might be the most common car, but it's interesting. Well, guys, we're about to hit the 1 hour mark, so I'm gonna get into my wrap up spiel here. So, 1, the Discord in the description is free. I will never charge for it. It is quite a robust community. There are a lot of very intelligent investors in that community. Not many donkeys compared to some other Discords out there. Come here. Now, also, I would appreciate it. Anyone that happens to be watching that's not already subscribed, hasn't already liked the stream, please do so. Also, I would greatly encourage you to check out our sponsor, Moomoo. Again, 6.8% margin rates, 8.1% bonus APY, which is available for the first 3 months, 5.1% thereafter. That is a free service, by the way. It is not paid. And Robinhood Gold and M1 Plus, which both are paid services, actually have higher margin rates than Moomoo does. And plus, you get access to all of their data and their trading indicators, which I think are some of the best out there. So give them a look. If you sign up through my exclusive link, you can get 15 free stocks, and plus it helps support the channel. What more of a win-win could you ask for? Also, tomorrow night, I will be on Cashflow Kings Live at 8 p.m. Eastern. The link to that channel is in the description. My X profile is linked in the description. We're trying to get to 500 followers there. 3,000 on this channel, and you guys can pick another stock for me to buy. 500 followers on X, and they can pick one. And if you cross over and get to vote at both elections, well, I think that's more fun than voting in politics. When you vote for stocks, you're making me spend my own hard-earned money. So with that, I want to thank you all for showing up today, and those of you that stuck around with me for the majority of this full hour. I really appreciate you. I thank everybody that participated in the conversation and chat. It was very enjoyable. I will try to do these lives a little bit more frequently, mix them in with my regular pre-recorded video content. Let me know if you have any kind of suggestions, recommendations, requests in the comments. If you're watching this after the fact, the video on demand, I will be doing something else tomorrow morning, not sure what. And once again, I want to just say I appreciate you all. Have a wonderful and safe Friday night.